Aren't you against corporate buyers and institutional landlords? That's not exactly what I said. They manage properties well and give great returns to investors. What's not to like? Well, not all REIT are created the same. Corporates can raise billions of dollars to buy single-family homes in bulk and price people out so they can't buy. Does that make any sense to you? But that doesn't mean that all REIT should be discouraged. I think commercial REIT has a lot of great potential for good investment. Hi everyone, it's Grace. Welcome back to my channel. If you're scrolling on your phone, you probably realize a bunch of new ads popping up, such as Fundrise, CrowdStreet, Realty Mogul, or any of the big names. So today's topic is about REIT, short for Real Estate Investment Trust, which is an innovative financial product that changed the way people invest in real estate. REIT is different from traditional real estate investment because you don't have the right to the title or equity. You're simply an investor of a financial product like ETF, stock, or just about any other, with or without a minimum investment requirement. And not all REIT should be treated equally. I explained in the past that house for rent is not a sustainable business model because the only way to increase cash flow and satisfy investors is to increase rent and transfer home expenses to renters. But this already creates a lot of problems. Surely, when people cannot afford to buy, they will rent. House for rent is the root cause of housing affordability issue. So why would you invest in a financial product that kills the dream of home ownership? Not to mention that the government will soon enforce regulations that prevent corporate investors from buying houses because home ownership is a top priority to improved livelihood. To put it simply, houses should be owned by individuals to fulfill their dream of home ownership before it is served as a financial product. Okay, so if houses are not bought by corporate investors, individual investors can still price people out, right? Well, there's more power to the renter. Besides, when corporate investors are prevented from buying houses, there's no infinite demand and supply will be plentiful. So there's less price pressure on individuals. They don't have to face bidding war, pay above asking price, or that sort of headache. That said, I do believe that commercial REIT should be treated separately from house for rent REIT, because commercial REIT encourages business success with a lot of constructive potentials. There are two fundamental differences between a house for rent REIT and a commercial REIT. Number one, cash flow structure. Since house for rent relies on the monthly rental income from a single tenant for several years, its cash flow source depends on a household. The rental cash flow is relatively fixed because rent-to-income ratio needs to be kept at a certain level in order for the household to save money. That's it. Commercial rental is another thing because the cash flow structure is very different. Business owners who rent commercial properties rely on business income. For instance, the income source of a cosmetic surgery office comes from consumers who pay for Botox, lip filler, butt implant, or whatever. Those income sources are spread across different consumers in varying amount. The business owner can achieve success, increase profit, and expand. So rent may increase as the business becomes more profitable. In addition, as business expands, the business owner may rent more properties, and the commercial property owner becomes more profitable, and so do REIT investors. Number two, lease structure. There is also a fundamental difference between a residential lease and a commercial lease. The residential lease for a house is called a gross lease. The renter is only responsible for rent and utilities, while common home expenses like property taxes, insurance, major repairs fall on the responsibility of the owner. Commercial lease is called a net lease. There's varying degrees of net. Depending on the nature of the business, the renter pays for a base rent, utilities like that of a residential renter, plus property taxes, insurance, maintenance, and structural repairs. The two fundamental differences determine that commercial REIT makes more sense and more profitable than house for rent REIT. The house for rent REIT also carries a major policy risk, like restrictions and rent control. Since house is a type of residential property directly related to home ownership in the US, government will impose policies to restrict title holding from large corporates because it directly prevents people from buying and owning houses. Another policy risk is rent control. Because a house receives rents from a household, it needs to be reasonable to allow savings, which means that the rent will be capped. When these two policies are fully in place, house for rent REIT is basically dead, and corporates will have no choice but to sell houses. So commercial REIT is a more worthy investment if you're looking for a new financial product. The policy risk for house for rent REIT is too obvious to ignore. So this is today's video about REIT. What do you think? Comment down in the section below and let me know. I will be making an announcement for my YouTube channel rebranding next weekend, so watch out for the community post and I'll see you there. As always, thank you very much for watching and I'll see you on the next one.